Welcome to Dukascopy world. In this video, we'll break down the fundamentals of Forex trading in a simple way. Let's start with the basics. What is Forex? You've probably heard of exchange rates, right? When you travel abroad, you need to exchange your money for the local currency, whether it's US dollars, euros, or any other currency. Then when your trip ends, you exchange any leftover foreign currency back. During this process, you might notice that the exchange rate has changed, causing you to either gain or lose money. This fluctuation happens because of the changing value of currencies in the foreign exchange market. Additionally, exchange providers charge a handling fee, which can also impact the amount you receive. As a result, some people feel like they're winning or losing money depending on the exchange rate. How Forex trading works. In Forex or FX trading, instead of physically exchanging paper money, we buy and sell currencies through an FX company's online platform. There are three major financial centers that set global exchange rates: London, New York, and Tokyo. These are the key hubs where trading activity is highest. Forex trading operates 24 hours a day, as long as the FX company offers it. However, the market's volatility varies depending on the trading session. When the market is active, prices move significantly, creating opportunities for traders. The risks and strategies of Forex trading. Managing your money wisely is crucial in Forex trading. Many beginners treat it like gambling, expecting quick profits, but the reality is that many traders lose money due to a lack of experience and strategy. Many traders struggle to stay in the market for months because of the high-risk nature of Forex. However, with the right approach, you can learn effective strategies to improve your success. The key lesson is, you can make or lose money based on when you enter and exit a trade. There is always a risk. However, by developing your own rules and strategies through experience, you may increase your chances of long-term success. In upcoming videos, I will introduce various strategies to help you navigate the FX market with more confidence. Risk management and emotional control. Without proper knowledge, jumping into Forex can lead to huge losses. It's essential to learn how to minimize losses and maximize profits. Additionally, mental discipline is crucial. If you're experiencing continuous losses, it's important to stay calm and manage your emotions. Never trade with money meant for daily expenses. Always use surplus funds to avoid financial stress. If you risk money that you cannot afford to lose, it could put you in a difficult situation financially and emotionally. Market hours and high volatility periods. As I mentioned earlier, the three major trading hubs, London, New York, and Tokyo, are where currency prices are determined. High volatility means prices move frequently and within a wide range, creating both opportunities and risks. To succeed, you must have a well-defined trading strategy. Remember, the Forex market can be both rewarding and risky. Always trade responsibly. Stay tuned for more lessons where I will guide you through different strategies to help you succeed in Forex trading. See you in the next video.